Hey, what's up, everybody? Good morning. How are you today? And it is a beautiful day. The weather's calling for rain here in Chicago, but it certainly doesn't look like it. But it's early in the day. So glad that you're here this morning. You're in for a ride. So buckle up and sit back. I hope you got your coffee with you and are ready to clue in. We're going to talk about Chicago and some markets and things like that this morning. So um, good morning. If you're new to the show, glad that you're here. If you're on YouTube, subscribe to that channel, please. And you are going to get a ton of content all the time. We're going to always be bringing out new tips, new techniques on a daily basis. If you're following us on Facebook or LinkedIn this morning, like this, love this, would you just help grow that following a little bit? And if you have been coming back often, please tell somebody about the show, because I think that there's some content here that we bring out on a weekly basis that will benefit people in different matters. So we're live from Chicago. Anybody remember a movie years ago, Hello Vietnam? That was, man, I'm really dating myself, but Robin Williams used to go, "Good morning, Vietnam," and just kind of scream that out. And it's kind of what I feel like this morning. Good morning, Chicago. Our guest is from Chicago, Ryan Morris, with over 10 years of commercial real estate finance experience. So he's the VP of Bellwether Enterprises, and we are going to talk about markets, rates, capital markets, and some interesting deals that Ryan's working on right now. So let me bring him in. Hey, good morning.
Good morning, Mike.
How
Thanks for
are
having
you?
me.
Yeah,
I'm
you bet.
doing well, doing well. Yeah, I feel like the last week and a half we're getting some good spring weather here in Chicago, so we'll
Yeah,
we'll
for sure.
take it.
Hey, looks like you're in your office downtown in the Loop.
Yeah. So we're right. We moved into our space about a year and a half ago. We're right at Wacker and Randolph, so it's a great location. Able to get to the West Loop, the River North, and be close to the train because I take the train in every day, so it's a nice 5 minute walk from seat to seat, from the desk to the train, which is nice.
Nice, nice. And you must live out in the burbs.
I do. I live out in the Western Burbs here in Chicago.
Nice, good for you. Well, listen, I always kick off with my famous question of what, in one word, what best describes you personally and professionally?
I would say the one word would be curious. I know I'm always trying to listen to different opinions. I think we all have kind of preconceived thoughts of how we feel about things, but always kind of interested, either it's sports, politics, business, kind of hearing a different perspective and then kind of forming an opinion off of that. I know I don't pretend to be the smartest guy in the room, and I always love kind of hearing different opinions from people, and then kind of forming an opinion based off of that. So I like to do that in my personal life, and then also kind of professionally. Being curious on deals or markets that I've never worked on before, or kind of diving in, and you know, you always can kind of learn something from every experience. So try to take that and use it in my career.
Absolutely. Good for you. I always say that if you're the smartest guy in the room, you're probably in the wrong room.
Exactly. You want to be around other
Yeah,
smart people.
smarter people. It's kind of like when you hire somebody. I always feel like you need to hire up, right? Uh,
Yeah.
to have that, somebody who's a little bit smarter than you or smarter than you, that
Yeah.
can help you excel. So,
And you
um,
want to hire people who aren't just going to agree with everything you have to say, and are going to challenge your thoughts and make you think critically. So
yeah,
it's
for
good to
sure.
have that back and forth.
For sure, absolutely. That's why I really like going to events that there's going to be a speaker at that is going to talk about something that is either going to benefit you personally or help you with your knowledge professionally when you're talking to a client, right?
Hmm.
So whether you're talking to somebody who's borrowing money, or I'm talking to somebody who's investing money, whatever that is, you want to be able to have the most updated information, right?
Absolutely.
So listen, you and I got connected by a great guy, Rick Scanlon at CBiz.
Absolutely.
I like Rick. He's really. a good guy to know. So, especially in the tax world. Um,
Yep.
but talk a little bit about who you are, your background, how you got into doing what you're doing, and
Absolutely. Yeah. So been working kind of in commercial real estate mortgage banking for 10 years. Prior to that, I worked at AIG for about 4 years out of school. So came out of school in the middle of the Great Recession, which was basically take what you can get from a job standpoint and get some experience. But was doing kind of the insurance underwriting for properties for about 4 years. Got my degree in finance, got my MBA in finance, and enjoyed looking at going out and seeing properties and looking at kind of the physical asset, but more wanting to kind of get back to the financial aspect of it versus kind of the insurance side. So kind of networked within the industry here in Chicago and got connected with a gentleman named Jack Cohen, who him and his family had a very successful commercial real estate mortgage banking firm here that had been around for 40 years. He kind of liked my background and thought I was able to be learned and be able to be taught. So came in and started working at Cohen Financial in 2013 and worked there. And Cohen Financial had a few different iterations from kind of an ownership standpoint. And then finally, Cohen and our parent company, which was SunTrust Bank, which was a bank based out of Atlanta, was acquired by, well, they merged with BB&T to form Truist Bank.
mm,
And we were going to kind of roll into Grandbridge Real Estate Capital, which is a commercial real estate mortgage banking platform, but a nationwide platform, but predominantly a lot in the southeast, kind of where the bank's footprint was. Obviously, us city in Chicago um, felt like a little bit on an island, but was kind of looking for, instead of being a part of a larger bank culture, looking for kind of that more entrepreneurial platform. And Bellwether, which is based in Cleveland, we have about 35 offices across the country. Um, had some agency underwriters here in Chicago and some affordable guys, but didn't really have kind of a market rate mortgage banking firm. So in about 3 years ago next month, we all moved over from Cohen Financial to Bellwether to kind of build out the commercial real estate market rate mortgage banking platform here in Chicago. And it's crazy to think it's been 3 years because it feels like we're still kind of the new kids a part of the platform, but it's a great entrepreneurial platform. you know, we have kind of all the tools in the toolbox, from the agency license, so Fannie, Freddie, and HUD for multifamily license of lending. We're a correspondent for 60 different life cos across the country. We do quite a bit of CMBS type of financing for the more securitized perm financing, but also work on kind of bridge, value add, business plan lending with the debt funds and insurance companies, and then also kind of the construction financing as well. And we've been seeing a lot more requests of that lately.
yeah, I found that to be kind of interesting, what you said. But sounds like so Bellwether, you guys do pretty much all debt and bridge, and any private equity in that at all?
Yeah, yeah. Primarily, I would say, and I don't know have the exact numbers, but I just know kind of the book I work on. I would say probably about 85% of it is going out and sourcing first mortgage debt, first senior mortgage debt. And then, depending on the need of the client, there are times where we're sourcing the senior first mortgage debt, but also finding either subordinate, mezz, or pref equity, or going out to our relationships on the limited partner equity side and kind of sourcing out the capital stack. So that's probably 10 to 15% of the business, and it comes on kind of a need by need basis. And it's usually, we're not going sourcing equity without kind of doing the whole capital stack. It's more of kind of a complementary service that we're providing when we're filling out the whole stack.
Okay, interesting. And you mentioned Chicago. You don't focus just in Chicago. I mean, you could loan nationwide, right?
Absolutely, absolutely. It's a relationship business, so a lot of the clients are Chicago based or kind of within the Midwest. But in the last year, I'm working on a deal right now, a multifamily deal in Jackson, Mississippi. Did a refi in Des Moines, Iowa. Um, working on some development deals in Phoenix and Denver right now, looking at some stuff kind of in Florida. So all of the lenders that I kind of mentioned that we have access to, were those are nationwide lenders. And then also one of the nice things about the Bellwether platform is we're in 35 different markets. We did about 14 to 15 billion dollars of financing last year. So if we're going to a deal, like I'm looking at a self-storage development deal in outside of Charlotte right now. So we have an office in Charlotte that we can go and reach out and partner up with them to kind of get some of those local bank relationships, to complement some of our national lenders that will lend nationwide.
Yeah, interesting. Good for you. So, we're kind of in a bit of a turbulent world right now, and
hmm
in the midst of mergers and acquisitions and bank blowups, what do any predictions, any thoughts around what's going on in the markets?
Yeah, I would say, it. What's really kind of important now is to understand, especially on the lending side, kind of where your capital is coming from. You get calls and have clients kind of send you term sheets and say, "Hey, I got this," or some broker said he can kind of do this. And my first question, if I haven't heard of the firm before, is, I'll look it up in Salesforce to see if anyone within Bellwether has worked on it. But kind of understanding where their capital is coming from, and you don't have any type of risk during kind of the closing process. Because I think right now, when things are kind of very turbulent, I think balance sheet lenders are going to be very important in the market. And when I say balance sheet lenders, a lot of those are the life insurance company lenders, that have that allocation and they're able to use it. Um, Additionally, banks that are using kind of their balance sheet, we've seen that credit really kind of tighten up since, it's been tightening up over the last year, but obviously what's what happened with the banking, some of the banking issues over the last 30 to 60 days, in the conversations that we've been having is, you know, we'll kind of service our kind of existing clients, but not trying to kind of overstretch, with kind of new business and new relationships kind of within the bank. So we think, in my opinion, that will kind of continue to tighten up from a credit standpoint on commercial real estate lending from the banks. Obviously, there's the CMBS market, which those lenders are making a loan and then they're securitizing it, and that market's been very choppy right now. And it's just kind of understanding where your capital is coming from and understanding what risks you have from an execution or closing standpoint are going to be key as we kind of move through this
Yeah.
dislocation or choppiness right now.
So when you when you talk about know where your money's coming from, do you refer more to a broker, or do you refer more to the person, where the capital's coming from behind that broker? So you mentioned insurance companies. What about wholesalers or direct to banks, things like that?
I would say know where that whoever the lender is, know where their capital is coming from. Is it a discretionary fund that they have the ability to lend, or do they have to get another approval? So they give you a term sheet, and then you go into closing, and then they have to go get a second approval from whoever has provided that allocation, or do they have kind of full discretion? Or if it's the CMBS, or any type of debt fund that's using a warehouse line or CLOs, understanding that, you know, if things change in the market during the closing process, and spreads blow out, your terms could be affected based off that. So it's really understanding, there's in the debt fund world, they're a dime a dozen, and they kind of come out of the woodwork, and it's understanding, how they are, where their capital is coming from, and making sure they have the ability to actually lend it, or if they have to get two or three more approvals, or they have to do a secondary financing on their own through a warehouse or a CLO to kind of get that across the line, because you don't want to be in a situation where you've spent a bunch of money for closing and you're 3 weeks out or 2 weeks out, and they say, well, our capital provider doesn't like the loan and they wanted to change the term, or we're having issues securitizing this. Um, and that's going to be a difficult conversation for all parties.
Yeah. Yeah, it's an interesting environment for sure, and I really, In the midst though of everybody saying that things are bad and interest rates are high, high in comparison to what? Because you even mentioned mid fives, right?
Yeah,
And
yeah,
we had a debt quote on a deal, you know, within the last 5 weeks here that, we were at 5.8. And I'm
hmm
like, that's not high.
yeah,
And does the deal work? No, I think seller pricing is still off, and sellers
yes,
need to get a little bit more realistic on their pricing because cap rates are decompressing, and
yeah.
because of that, so it's not really a function of the interest rate today. I think it's still a seller function at this point. Yes.
Absolutely. Yeah, it's I got the question, where rates are at today versus where they were 6 months ago. And 6 months ago is late October, early November. The 10-year treasury was almost four and a quarter
Yeah,
around Halloween last year. Today it's 355,
yeah,
and spreads have there's been a little choppiness when some of the banking issues happened, but spreads have for the most part held. So, if you look at where rates are at from 6 months ago, they're probably down 20, 25, maybe 30 basis points from when they were 6 months ago. But the problem is deals are still being priced off of late 21 and 2022 interest rates when those interest rates were in the fours. So
yeah,
that's where
absolutely.
the market just has to come back in, and it's slowly kind of getting there. But yeah, if you're getting 10-year money today, somewhere around 5.5, for multifamily, and if you're going to the agencies and you have some affordability, and they will provide better pricing for affordability because it hits their mission. You could see rates in the low fives, and historically that was very, very good and attractive financing. It's just pricing is still based on 4% interest rates and not 5% interest rates, and that's
Yeah,
what needs to happen.
absolutely. Hey, we got a comment from one of the listeners this morning, Jason. He's asking if you do anything in Kansas City, Missouri.
I've looked at stuff in Kansas City, so yeah, we absolutely have the ability to do stuff in KC.
Yeah. So, Jason, Ryan's information is at the bottom of the screen. Shoot him an email and tell him what you got that you're looking at, and see if he can't help you. Hey, talk a little bit about this. All right. You mentioned pref equity and mez debt. Talk a little bit about that. Is pref and mez the same? How do they work in the capital stack? How can they work to the best interest of a sponsor general partnership team? Uh, you know, just talk about that for a little bit.
Yeah, yeah. Well, it's subordinate debt to kind of bridge that gap between the common equity and where your senior's at. We see it a lot on our construction deals where the senior bank construction lender is getting you to somewhere 50, 55%, maybe 60%, and then the mez debt will get you more into that 70, 75% range. The pricing on that is probably going to be 10 to 12%,
Mm.
maybe even 13%. So if you blend that out between where your senior is at 50 to 60%, um, somewhere in the SOFR plus 300 to 350, that's an 8.5% rate today, and then you have another 10, 15, uh, 10, 15, 20% of the equity coming in at 12, 11%. You're kind of blended um, at a 10% rate today, but you can kind of use that. I think some people look at the sticker shock between the mez and the pref type of piece and say, wow, that's a really large rate. But when you're kind of blending it out and you're able to get that extra leverage versus kind of raising it through other LP or kind of the syndication, it makes sense from that standpoint.
Right.
Um, it's more kind of coming down to, on the pref side, a lot of the times they're looking for some of the upside in addition to kind of their current pay versus the mez, which is mostly just kind of the current pay of the interest rate and knowing where the rights are of your um, mez and pref equity provider, and their interest in the deal is through the entity. So understanding their rights as in the partnership, and if they need to step in as the borrower, making sure that the senior lender is comfortable with them.
Yeah. And how does agency how do the agencies look at having to have to use a pref or a mez debt in a capital stack?
The agencies are open to it. They obviously have kind of specific um, pref and mez providers that understand the agency loan docs. And we've had quite a few conversations with some of those providers who have already done deals with the agencies. And the agencies are comfortable with them. They're comfortable with the agencies. So again, it's more having those providers that the agencies are comfortable with, but they definitely are able to do that on deals. It's more, and we've been seeing it more lately as people are losing out on dollars due to higher interest rates and being DSCR constrained.
Mm.
Bringing in, if there is a value add piece in there, bringing in a mez or a pref piece to get you some more dollars and create that value.
Yeah, because it will affect the DSCR, right? And doesn't it then affect first debt?
Well, the first debt is going to be constrained, based probably down to a 125 on a tier two. But then the mez they'll underwrite that usually down to, on each mez or pref provider, probably down to like a 105 or a 110. So
Oh,
you can
okay.
get a little bit extra, and that's just on their piece. But your senior is still going to be constrained on where the agencies need you to be at.
Got it. Got it. So it sounds like pref or mez debt would work good on a value add deal. Say maybe a sponsor needed to raise a big chunk of money on a syndication, but they only needed 75% of the entire stack to close the deal. Um, you could use that mez or pref to help that raise for short term and then backfill it out.
Yeah, usually, and you mentioned agencies. Usually, how that subordinate piece is paid off is through a supplemental or through a sale or like a straight refi. But a lot of it's through because the agencies do provide that supplemental piece. Is you on a value add, you have that subordinate piece, you create the value, and then it now fits through a supplemental to pay it off.
Yeah.
The Mets piece or the
Yeah.
subordinate piece.
Interesting. And then you said that there's a lot of construction requests today. So are there a lot of shovels getting ready to go in the ground?
I think there's a lot of people who have deals kind of in the pipeline. Obviously, they're kind of getting developers are getting hit at twofold. One from construction pricing, which has been high for a while. I think people thought there might be a little bit of relief in that pricing. It really hasn't happened. It's kind of more kind of plateaued. So construction prices are still high, and then your cost of capital has also gone higher. So that's increasing to the total cost of the project. So that's just kind of the looking at it from a project standpoint, looking at it from the capital markets. Primarily a lot of these deals were financed with the banks, and we've seen the banks really kind of, you know, prior to what happened 30 to 60 days ago with SVB and Signature
Mhm.
Bank. We saw more tightening from the banks and the metrics that they're underwriting on the exit for the stabilized underwriting using a 7.5, 8% interest rate, and it needs to cover at a 125 on a 25 or 30-year AM. That really kind of constrains your proceeds when you're using that higher interest rate on the exit. So, we saw that trend, and then obviously, over the last, I would say, 3 months, that has even kind of come in more. We're working on a couple of construction deals in some good markets. Like we're working on one in Charlotte right now. We're out to 100 lenders, and that developer mostly has been a bank borrower, but you know those banks just aren't there. So the quotes that we're getting are a lot from either the life cos or some of the debt funds that are providing a little bit more leverage, 60, 65%, but their pricing is SOFR 450 to 500, which is a 10% rate today. So,
Yeah.
you know, does that work with your equity or does it work with the returns? A lot of times it may not, but we're just trying to have those conversations up
Yeah.
front with the developers to say, hey, here's where the capital markets is. Like before, we all kind of go through that process. Does this even work where
Yeah.
the
What's
capital works today?
SOFR at today?
Yeah.
What is SOFR at today?
It's just under 5, so it's about around 5%.
And then what's the spread on it?
Um, if you're going to go to a bank, it's probably 3 to 350, which is 8.5, 8 to 8.5. If you're going to go to a debt fund, you're probably 450 on the low end, up to 500.
Man, it's a big difference than borrowing against the T-bills, right?
Yeah, yeah, and the 10-year Treasury is 3.5. So,
Yeah.
I was working on a deal I mentioned before we kind of jumped on. It was a bridge deal that needed some more time through lease up. It was the one in Des Moines, and they had taken it out to the market, but it was only 70% leased at the time. Um, so, they didn't kind of hit the numbers that they wanted to hit. And the reason was because there's such a delta between bridge financing today when you're pricing over SOFR, and SOFR is 5%, and you're putting a 3 to 400 spread over that's 8, 9%. And that's what, a buyer would probably need to finance that with, unless they were an all cash buyer on that deal because it was not stabilized, versus having a deal that is 90% lease. And then you can go out to the agencies and finance it with 5.5 to low 5% rate. So that's going to obviously affect kind of the pricing. So ultimately, the client was like, let's put it, instead of selling it now in this market, let's put another 2-year bridge loan on it. The pricing wasn't cheap for that, but it allows them to stabilize it and then bring it back out to the sales market at 90% plus occupancy. So then that new buyer can get agency debt instead of having to finance it with bridge debt today.
Hmm, interesting. Well, listen, this definitely I've been in the right room this morning, so thank you for that. Let's change it up a little bit though, and as we start to wind down here, let's talk about some fun things. So,
Yeah.
I always like to ask 3 bonus questions of my guests, and the first one is, hey, what's the best book you've ever read?
The best book I have ever read. Um, Great question. Uh, Probably Master and Commander. Um, it was a great book. It took me probably 3 or 4 times to kind of understand all the C language of it, and all the kind of the lingo of it. But it was a great book to kind of see, to put yourself in that world of these guys, on the ocean, and kind of working through those large ships, which are a world to themselves. So
Yeah, interesting. Who was that written by?
it was a few years ago, so I'm not exactly sure. So
Okay. And then, Chicago based, right? What's
yep.
your favorite restaurant here in Chicago?
Favorite restaurant here in Chicago. Um, I do like Au Cheval for a great burger.
Sure.
Um, so I would say that's probably up there. And then there is, what is it's the Argentinian restaurant. I moved into the suburbs about 4 years ago, so I don't know all the Chicago restaurants by heart anymore. But
Yeah.
there's a nice Argentinian restaurant on Southport that is pretty good.
Okay. And then best tourist attraction.
In Chicago,
Yeah.
I would say the lake. I think there's nothing like it. It's one of those things where you're riding along your bike, or just walking along kind of the lakefront, and you get up close to the water, and it looks like a lake, but there's a way that the sun hits the lake that it just looks like a tropical sea. So I always love just kind of walking by it, and taking it all in.
Yeah, that's for sure. Well, listen, thanks for being here this morning. Definitely a wealth of knowledge. That's for sure, and I appreciate that. Every time I talk to somebody about this conversation, it helps me grow and learn a lot more. But I know that it helps stretch my listeners a lot. So thanks for that this morning. How
Absolutely.
do,
Well, appreciate the opportunity.
yeah, and how do people get a hold of you if they want to talk more about capital, or if they're trying to do a deal?
Yeah, I think email would be the best. I think it's below ryan.morris@bwe.com, or I can be found on LinkedIn as well. Yeah, and happy to, I tell, all my clients, even if you're in the beginning stages and you don't even have a deal under contract, but you're trying to kind of figure out um, sharpening your pencils for your underwriting so you can put the best bid in, or just trying to kind of figure something out, please use me as a resource. So
Awesome. And thanks for being here. Hey, this is I try to keep this Thursday morning live really Chicago focused. So if you know of anybody else, any business owners, entrepreneurs from the area, suburban or Chicago, I'd love to, and you think this would benefit them to be on in the morning, I would love to get a referral of somebody to connect with and talk to them about being on a Thursday morning. So
great, we'll do.
great.
Appreciate it.
Hey, thanks for being here. I'm going to move you to the back room. Say goodbye. If you hang out with me for a minute, I'd appreciate it.
All right, perfect.
Thanks. Well, like I said, that was definitely, I was in the smartest or in a room that somebody was smarter than me this morning. So I learned a lot. I hope this was good for you. I know that we talked a lot about things that might be outside of your norm, or maybe not. And maybe this was just kind of some refresher stuff for you. But Ryan is definitely a good connect. I've had him look at a couple of deals. We're in conversation on a couple of things, and he is definitely somebody that can help you analyze your deal, look at it, see if it's something that you want to work with, or makes sense, or doesn't make sense, or maybe the best way to stack the capital. So thanks for being here. Remember, we're here every Thursday morning. If you know somebody who'd benefit from being on this show, I have a couple of great guests coming up over the next few weeks. Look forward to having a connection and somebody that I should talk to about being on. Make it a great week. Be intentional about what you do. Remember, I always talk about our intentionality, right? If you are intentional about your daily routines and what you're doing throughout the day, you're going to progress a lot more personally as well as professionally. Take care, everybody. We'll be here on next Thursday. Remember, Saturday